Good afternoon. I just want to go over and recap the strategy for the Vol Delta summary. So what should happen? Ideally, we get price as close as zero as possible, because if we leave it too late, for example, the pound USD, it's already done its move. So that would be a good trade. You'd want to get it close to zero. Obviously, get the buy confirmation or the sell confirmation. In an ideal world, is that we would have green, green, green for that buy. So if we had a tick here and we had green, 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 that's a really good sign, because if we're above the daily pivot and we're above the weekly pivot and then we're above the monthly pivot, we know that we're trending technically higher. So then therefore we've got the technicals behind us with the sentiment. It's going to be a very powerful signal. Okay, the QDB score change is a medium term, long term outlook, because it takes into account fundamentals such as a country's GDP, unemployment, inflation, and also the change as well. And so obviously if we've got a nice positive score and we've got green, 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 and then we've got the buy, it should be good. Okay, so that's the strategy. You do note that we've got some new charts down here, which you don't have to use, but I think maybe it might be quite useful. And we can see we had a strong pound as we closed, a slightly weak New Zealand dollar, and we had that weak USD. That just persisted all day. I was surprised about the weakness on the dollar, but it just was. I thought we might have seen a turnaround, but we saw that we actually were quite negative all day, but we weren't as negative as the yen. The yen took a lot of the slack, and it actually performed very poorly on the total. So we can see from a high level view, if you just want to look for trade ideas and you want to get an idea about relative strength, we know that the pound was strongest to the dollar, we know it was strongest to the yen. So therefore we knew that the pound was strong because it's strong against those two, so it's a good sign, isn't it? And now if we use that data and we add it, it's very simple addition. We can see the pound has taken a big wedge of that pie, and also the euro as well. So if you're looking for trade ideas, you could look for strong versus weak. Remember, this is just purely technical as well. It doesn't take into account sentiment, but that's what this is for up here, the sentiment. So you're looking for strong versus weak, so pound Swiss or the euro CAD, for example. Then it gives you trade ideas. And so this is the sentiment. And if we've got a negative number, it tells us that they're shorting. A positive number tells us that they're buying. So we should see price performance reflect that. They sell the pound, which they did very strongly yesterday. We should see price performance pump. And if they go long the dollar, we'll see negative price performance. And that's that. It's great because it proves the sentiment works. That it's very reassuring to know that we spent so many years looking at sentiment and we can see the price performance reflect it. And it's very cruel and very it's when you see that the herd go one way and then they get crushed. It has like entertainment value, but also it's got like you think about it, well, actually it's actually quite sad, because these people are constantly getting chewed up because they're not looking at the sentiment. They don't realise they're forming part of that herd, and they performed a very herd-like behaviour on the pound just yesterday. I mean, really pumped. Look at that move. Like the pound Swiss, nearly 1% move. Pound yen, 1%. Pound Kiwi, 1.4%. So, you want to definitely be looking at your sentiment. That's the key, okay? So this going to be very useful to see basket sentiment. Now this is a thing that I was just testing. Now let's say, for example, what should happen is that we, at some point, there'll be a point in time where we won't have a weak dollar, a weak yen, but this graphic here will tell us what the likely pair is going to be once something moves, once something wakes up. So, for example, we have like a news event and it's dollar positive. We'll see fluctuation on here, and then we may see fluctuation on yen, and then we'll start to see the difference, what the currency pair that's moved against the two. And as we closed, we saw that the New Zealand dollar CAD moved a lot versus the dollar, and the yen. Or should I say the Kiwi moved a lot versus the dollar against the yen, and the CAD moved a lot against the dollar versus the yen. So therefore, we know that New Zealand dollar CAD moved. It was had like a volatility pump as we close. So we knew that there's some movement from the big fish on that particular currency pair on the dollar CAD or the New Zealand dollar USD, the CAD yen or the Kiwi yen. Okay, so that should be quite useful, and this would be a something that you could use alongside this. But I think this is going to be like a scalper thing because this moves a hell of a lot. I was watching it yesterday, and it could be good for uh, when you use with like at inflection points. What do I mean by inflection point? It's like a strong level, like say for example an SLC would be a strong level. So we come down to the SLC, which I think might happen due to 50-50. We'll see a movement on the Euro USD, but we'll also see the movement on the euro as well, and we're going to see what is it going to pump against and what's it going to weaken against. So I think this should be really powerful. And we have a big surge on, for example, the euro CAD. If we hit that SLC, then we know that the euro CAD is going to be a big mover, and then we basically things correlate, and so that should be quite useful. And it doesn't tell you buy or sell, by the way. It doesn't tell you to buy that or to sell this particular currency pair. It just tells us that there was a big movement that we can synthesize from the dollar CAD or the New Zealand dollar USD or the CAD yen or the Kiwi yen. So there was some movement that moved away, and it looks like they shorted the New Zealand dollar and the CAD in equal measure. So therefore, we had that move there. So it tells us that we could have a big move on that particular currency pair. You also note that there's a big blank area on the right hand side, and you think, well, why have I done it like that? It's for that purpose. So you'd use technical analysis in conjunction with the sheet. So say for example we've got the Euro USD buy, which we did on Friday. One chap messaged me and he said, well, we got the Euro USD buy, let's see how we go. And we certainly pumped. And then so what you want to do is like keep an eye on the sentiment technicals, get the SLC, pending that we got the green, and then we get the buy. That's going to be a really good entry because we'll come down to take liquidity and we're going to pump. So we want to come down to take stops before we go up, and that's why things zigzag. So this move here was a stop one. This move here was a stop one. So we pumped SLC, 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 SLC. So that's what happened. So we zigzag to take liquidity. So I think that could be likely. Pending that we come down to the SLC and we get a buy, that's going to be a really good setup. And so that's how you can use it. This is a little bit fuzzy logic, but hopefully that makes sense. So much that we should see some price movement on that particular currency pair. And remember, it's not necessarily a buy or sell, but it'll tell us that it could be a mover as we go into the open. So that's the video. We just talked about the strategy and what we're supposed to expect to see. We can't expect to see things go in straight lines. They have to move lower before they come up higher. And this tells you why. In case you're wondering why things retraced, because it has to take liquidity out of the market. Okay. And if you're interested in the stop losses or the take profits, you could just click that, and then we want to be looking at your resistances for TP if you've got a long bias, and then you've got support is for your stop loss. So you probably just want it slightly below that, or slightly, on that, or just above it. Okay, so that's how you can base your stop loss TP depending on your bias. Okay, we'll come back home, and that's it. So hopefully that helps. We just talked about the strategy, how to enter, use it in conjunction with technical analysis, and then we've got a high-level summary about the dollar or the yen, and also we've got some interesting metric down here to tell us volatility increases as well. So quite useful, Any questions, let me know, and I'll speak to you guys soon.